Hey everyone, welcome back. Today we're diving into one of the most important ideas in modern macro investing. Why Bitcoin acts as the world's clearest barometer for global liquidity. This framework comes from a September 2024 piece by Alden and Sam Callahan. It's called Bitcoin, a Global Liquidity Barometer. If you want to understand why Bitcoin's price moves the way it does, this is the map. Let's break it down step by step. The context, the data, why Bitcoin is uniquely positioned, and the practical lessons. First, the big picture context. Since the 2008 crisis, central banks have been the dominant force. As economist L. Arian said, they are the only game in town. Stanley Druckenmiller put it bluntly, earnings don't move markets, it's liquidity. When central banks print money, there's more dollars chasing the same assets. Stocks, real estate, gold, and Bitcoin tend to go up. The cleanest measure is Global M2, the money supply across the 8 largest economies, hitting $22.4 trillion by late 2025. Now, the data. Between 2013 and 2024, Bitcoin's price showed an overall correlation of 0.94 with global liquidity. That is extremely strong. Bitcoin moved in the same direction as liquidity 83% of the time over any 12-month period. No other major asset class comes close. Not stocks, not gold, and certainly not bonds. Bitcoin, in other words, is the purest liquidity barometer on the planet. Why? Stocks have earnings and dividends to buffer them. Gold is sometimes a safe haven, sometimes risk-on. Bitcoin has none of that. It has no earnings or dividends, so when global liquidity expands, capital flows into Bitcoin almost mechanically. When it contracts, it flows out just as fast. That makes Bitcoin the cleanest way to express a view on whether central banks are printing or tightening, but nothing is perfect.
Bitcoin's correlation weakens over short time frames due to shocks, exchange hacks, major bankruptcies like Mt. Gox or Terra Luna, and regulatory headlines. The biggest breakdowns happen at the end of bull markets, when Bitcoin becomes extremely overvalued and long-term holders start selling into strength. To spot these moments, combine liquidity analysis with on-chain metrics. When MVRV spikes while liquidity is still rising, that's your warning. Internal dynamics are overriding the macro trend. Liquidity gives you the wind direction. So, the lessons. Track Global M2. If it's expanding, odds favor Bitcoin. If it's contracting, be defensive. Bitcoin is your cleanest liquidity trade. Don't ignore valuation. Expect short-term noise. As Bitcoin matures, its role as the global liquidity barometer will only become cleaner. In a world of central bank dominance, Bitcoin is the market's most sensitive smoke alarm for global money conditions. Check the link in the description for the full research. Thanks for watching. Hit subscribe, and I'll see you in the next one.